to be talking about a new topic because we get this all the time and people want to know exactly what our perspective is from an investment agency. What is going to happen if the US stock market collapsed? But I want to talk about quickly. The price right now is $8,439.78, and it's been around this level. We can see the one-day forecast. It has seen a growth of around 11%, but it is staying around the same price, around 8.4. And like I said in my last video, I think it's either going to hit 9,000 and go all the way up to 14,000, or it is going to drop all the way back down, and we're going to see a huge correction back to its lowest price, probably around $5,000. So it's a really interesting time these next few days, just making sure that you catch the market right. And I'm never going to tell you exactly what you should do because I don't want to tell anybody how to win or how to lose their money, because that is up to you to decide yourselves. Let's get on to the main topic then. Will the US stock market collapse? And I say it in a sense as if it will collapse, because it will collapse. There is almost an agreement in the society today that it will collapse. It's inevitable. And I came across a really cool article actually from Jim Rogers, and he is one of the co-founders of Quantum Fund, along with an individual called George Soros, which I'm sure a lot of people are not big fans of, especially with his predicament in the UK in the 1990s, where he effectively collapsed the UK economy and bought it back at a huge dip and made so much money trying to collapse the UK currency. But let's not talk about that. That is a story for another time. But he had a really interesting story actually, because Jim Rogers is one of the proponents who suggest there will be a huge US stock market collapse. And when you're working along with George Soros, I mean, you have to take his words with a little bit of clarity sometimes. So we can see here that he has predicted that the US market could see a correction of around 30 to 40%. This, of course, is much less than we have seen in our crypto markets, with some currencies seeing a correction of around 90%. However, a 30 to 40% correction in the US economy is a huge factor and will obliterate the wealth of millions of people. So I think it's fitting now to show you the US national debt levels. There's a really nice website that we sometimes use for presentations, usdebtclock.org. Okay, and we can see that the US national debt here sits at $20 trillion. And we can just see how quickly this goes up. Okay, so when it hits 900,000, we'll see and time how long it takes. So it's hitting now. And probably by the end of my sentence, the US national debt will have gained 100,000 more debt into the system. And now, there we go. Within probably about 5, 6, 7 seconds, the US has generated $100,000 more debt. It's insane. It really is insane. So, what has this got to do with the topic? Well, it fits in perfectly because the US national debt is growing every single day. We'll go back to the article then, because and I want to kind of compare two different collapses, economic collapses. This is the 2008/2009 collapse, which was built upon the majority of US debt levels. We also had problems in Iceland where the country effectively collapsed because of its debts, and many bankers got sent to jail because of that, something we did not see in the US. Now, the 2008 levels of debt were much lower than today. Debt has only continued to increase every single second. So, the man here, Jim Rogers, suggests that the crash would be unimaginable compared to 2008. It will be huge, and the question now is, how will that affect crypto markets? It's a very hot topic because a lot of people think that crypto markets will benefit significantly. Will it? We'll have to find out. So before I go into the topic though, I want to talk about the valuation and what affects the US economy, the global economy, and then also what affects crypto markets because they are not so intertwined. There's not a strong correlation as a lot of people expect there is. So I've really I kind of compounded the U.S. markets and the global markets into four different sections. So the first one is the state of economy. Second one is economic policies. Third one is political situations. And fourth one is government. So these are all kind of macro effects. So the main one, though, however, is government and the party's decision on how the country should move forward. And a good example is Brexit, which we will use as an example in a few minutes. How Brexit affected an economy and collapsed the stock market within a few hours of the decision being made. And we're going to look at the correlation between that and crypto markets. But first, I've put, as you will, crypto markets in five different sections. These are the first one, which is development talent, schedules, and the caliber of the development team. How good is the current market in cryptocurrency at developing new altcoins, at developing new coins, developing new ICOs? The second one, state of the development relationships. Are these developers working together collectively to benefit the crypto market? Or are they working in isolation, something that might be negative towards the market? The third topic or point is the state of the crypto systems. Now, this is perhaps one of the biggest factors. And this includes hacking, exchanges, and Ponzi schemes such as BitConnect, who might affect our markets. We can see a huge problem looming in the market with potentially Tether and USDT. And we also saw BitConnect, the value of their currency dropping from $300 to around $30 in a matter of hours. The fourth topic point is utility. So how can these cryptocurrencies be used in a market? If they are used in a market effectively, they've got real world applications, then you can expect that the value will relatively hold or be worth it in the future, even if there was a stock market collapse. And then the fifth one, a topic everybody knows about, is FUD and politics. Something we've seen so much in the recent days and weeks, especially in the first quarter of 2018 so far, with a lot of FUD coming from China, coming from Korea, from the US, from India, regarding banning cryptocurrencies. So we'll get on to the topic now. Will it be affected? Well, we're going to look into it right now with a little bit of a diagram here from crypto coin market capitalization. So what I've done here is get the figures from 2016, the date when Brexit came about. And we can see upon the eve of Brexit, on June 22nd, the market cap was around 12 billion USD. Much lower than it is today, of course. On the decision for Brexit to leave, we dropped around 2 billion in market cap. This was a big drop back then, and it was affected by Brexit, we can see. However, this is temporary, because if we scroll up now to less than 1 day later, the whole entire wealth got regained. It came back up straight away, almost. So, would a market crash in the US, something extremely more, just an extremely worse event, something you can't even imagine, it would affect crypto. I have no questions about that. Why? I feel like it'll have an effect because people have less money available, and that's what crypto is about. People have a lot of money lying around, so they invest it in crypto because there's a high chance of success and reward and profit in crypto. However, we can see that the market did bounce up, and this is a positive thing for crypto because in an event of a market crash in the US, my own personal opinion is that people may choose crypto. I think it will be adopted in a very different way. Governments will try to adopt a new and potentially their own cryptocurrencies instead of using the existing cryptocurrencies. but I do think particularly blockchain as a whole will be integrated when the economy and the Federal Reserve try to reboot the economy. And I do think that blockchain will be incorporated heavily into this new branding of the economy. Now, traditionally, when economies do collapse, we see a move towards gold. Is there a price correlation between crypto and gold? I know it's very heavily discussed and debated, and there's a really cool article actually which just came out a few days ago over on CNBC, which is not always the best source of news, but we're going to go over it anyway. I'm going to play you just a few start of this video. We have an analyst here talking about the correlation, and they do show quite a nice little graph that I can incorporate. So I'll play it, I'll shut up, and you can just have a listen for a second.
However, towards the end of last year, we started to notice that correlation turned at least mildly negative. And so our view really is that it's a marginal negative relationship currently, but there are a lot of interesting things happening at the same time when it comes to, let's say, search interest in Bitcoin. When we saw interest in Bitcoin peak as measured by Google Trends, that's really when we saw this marginal negative relationship between gold and Bitcoin develop.
Okay, so we can see that he is pointing towards, I mean, forget the guy who's talking, but we can see from the graph, if I scroll back, that the relationship is not concrete. It's definitely not a positive relationship. We can see that when the price of gold is increasing, the price of Bitcoin is generally going down. So, how would this affect an economy in the state of a crash? Well, it could potentially mean that investors move towards traditional stores of wealth. These are gold, precious metals, something that is tangible, that keeps its value. Cryptocurrency isn't tangible, of course. However, it is separate from the financial markets. There is almost, especially now since the credit cards have been blocked in many places, such as Lloyd's of London, and collectively across the globe, they are moving towards banning credit card transactions into cryptocurrency. So cryptocurrency is in effect becoming further and further away from the traditional stock market, which is a good thing in case of a collapse, because the further away it gets, the less a stock market collapse would affect the cryptocurrency. What is my opinion on whether it would affect it overall? I think that cryptocurrency would be affected negatively at the start due to the decrease in money supply and also the investment into tangible assets. However, I do think that blockchain has a future post-collapse. I feel like companies, I feel like businesses, individuals will begin to try and adopt this into their everyday lifestyle, and maybe not so much Bitcoin I use Bitcoin as a synonym for all cryptocurrencies because it's the most well known. But I do think that it would be adopted, particularly blockchain and its technologies. Blockchain's got so many uses that it can be used in, and I feel like that is the future post collapse of the US stock market. So that's just my opinion, guys. I hopefully thought you provided some more information on this. And it's a very interesting topic. Let me know, guys, what you think in the comments. Would it affect cryptocurrency market and a collapse in the US market or the global market? Would it affect it? What do you guys think?